eventually we'll own our own data and, blockchain telephones and internet provided to the world. And the possibilities are endless. And it's really exciting to see all of this, even outside of tokenization, to see all of the things that are coming out and how it's changing the world is really exciting to watch.
Welcome to the Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hannes Henchi.
Welcome back to the Path to Wealth. Today we have Courtney Moeller from Empire Investment Group. She is looking into tokenizing real estate, so we will really dive into what that means in terms of the liquidity for the real estate space and also from the technical aspect and the legal aspect. So welcome to the show, Courtney.
Hi, thank you so much for having me. The crypto space in general, crypto, blockchain, tokenizing, Bitcoin mining, everything, it's such an incredible space and there's so much opportunity out there. And I'm really excited to be submerged in it and to go to all of these different places and different groups and talk about it and talk about how tokenization is really going to affect so many different markets, and not just tokenization, but blockchain in general.
So let's break this down for the listener who's not that familiar with what is a token, so they get an idea how that relates to real estate.
Sure. And this is definitely something that I talk about a lot. So when it comes to crypto, there's coins, there's tokens, and there's different types of tokens actually. So a coin is something like Bitcoin or Ethereum that has its own blockchain. And then you have a token, which is something that's built on an existing blockchain like Ethereum or Bitcoin. And so there are a whole bunch of them out there. And the best and easiest way that I have come up with to explain tokenization is taking an asset like an apartment complex or a house or really any kind of asset and creating shares of it, just like you would in the stock market. So you've got Amazon. Amazon is broken down into shares. So tokenizing is taking an apartment complex and breaking it down into shares, which are represented by tokens. So you have the apartment complex, somebody invests in that deal, and their investment is represented as tokens, like shares in the stock market. So our vision and what we're trying to do is to create what I call like the Amazon marketplace of assets. So you can come in and you've got all of these different assets, whether they're funds or real estate, pretty much any asset can be tokenized, and you've got your money and you can buy shares of this apartment complex, shares of this storage fund, shares of this hedge fund, and you can spread your money into a lot of different assets. And because you do have those shares and it's done differently, it creates liquidity and your ability to get in and out of assets better. So, which we can get into more of that a little bit later. But that's kind of our vision, is to create a marketplace.
Well, that's a big goal, to create a marketplace. So you will be the next Shopify or Amazon here. When it comes to liquidity, obviously, in terms of what we're used to in the real estate syndications, it's completely illiquid till we actually exit the position. So how would that look like once you actually tokenize it, and how is that facilitated on the marketplace?
Sure, and that's such a great question. And the liquidity aspect of this is one of the more appealing parts of being able to tokenize real estate. So generally, when you make that investment, you are locked into it until there's an exit strategy 3, 4, 5, 6 years down the road. So when you do this now, just because you're tokenizing, we're still regulated by the SEC. The entire investment and procedure and processes are all exactly the same. We're just adding in an additional step, which is the actual tokenization of the assets. So for a new asset that is a new raise, you are still locked into that for 1 year. So even with tokenization for the first year of that asset, you're locked in. There is no liquidity there. But after that 1 year, as long as you have this marketplace, you can say you want to sell 20% of this deal or of this apartment complex so that you can take that money and invest in another asset, and you're able to do that. So you can specify, you can do a part of it, half of it, all of it, and completely eliminate your position based on what you're wanting to do. So the other thing that I really like about it is, say you have a couple that's married and there's a divorce that's happening, heaven forbid, nobody wants to see that, but you no longer have to sell that asset to split that with your spouse. You are able to, distribute so many of those tokens, so that you can retain that asset as well. And one of the other things that I'm really excited about is when you have this tokenization, I really think that we will start seeing people hold on to their assets longer, because you'll be able to take that asset, move over into the decentralized finance or DeFi part of the world and borrow against it, and completely eliminate the need for traditional banking systems altogether. And because you have monthly appraisals done on these properties, so you'll know exactly what your tokens are worth on a monthly basis, which is something that people, I don't know that they really know that now. You make that investment and you really don't know what you're going to end up with at the end of that 5-year, 6-year term. This hand, will be processing rent rolls and everything else, and you'll know what the value of those tokens are on a monthly basis. So that's another really big advantage to having this done. So, and when you start moving title work and everything onto the blockchain and it's stored there, now you are eliminating the need to continue to do title work over and over and over again. Title insurance is so expensive. It's a huge portion of refinancing a property or anything like that. So when that information is there, which also is accessible 24 hours a day, you don't have to wait until Monday morning to access that information. When that information is there and you can access liens or see if there's been any changes made, it really streamlines that process and will eliminate the need to continue to pay for that same title policy over and over again. So I'm really excited, and I'm curious to see how it's going to affect a lot of the traditional real estate processes that we have in place now.
So, but what I'm hearing, it's also a bit of a double-edged sword, because maybe not everybody wants to know every month what the value is, because that's kind of the sanity of real estate investment for some maybe emotional investors compared to the stock market, which they can see at the palm of the finger, and that drives the anxiety in their investment experience. While in real estate, it's like, okay, yeah, I've put my 50K or 100K in this investment over here, and it looks like it's performing well. I'm getting my cash flow from the distributions. So it looks like it's going well. But as you said, they really only know how well it went and how the forced appreciation happened at the end of the life cycle of their investment. But maybe that's something that people appreciate, because, I mean, right now we're at like the bottom of the crypto market in a way this year. And we've seen the stock market tumble. And that's something that people don't necessarily appreciate, this kind of experience.
No, I'm smiling because I love that you brought that up, because one of the benefits of real estate really is the fact that you make that investment and you are locked into it. There is no selling before that. So you have to let that investment mature. And you are the first person that has ever brought that up. In all of the people that I talk to, you are the first one. And that is a double-edged sword, because people have been scared out of those positions. But that's actually when you want to be strong and hold through that. But a lot of people have a difficult time doing that. So it's one of those things where equity happens. When you hold real estate, equity happens. And pretty much essentially at the end of that 5, 6, 7 year, whatever that term is, there's going to be that money there. You're forced to hold through whatever the markets are doing, whatever is happening economically in the world. You're forced to hold through that. So you're exactly right. So that could definitely be a double-edged sword. I think a lot of the people that are invested in real estate and get involved in that, like, I don't ever liquidate my positions. Even in this crypto downturn that we're sitting through, I haven't liquidated a single one of my crypto positions. In fact, I've now got, buy orders set in. No, I wouldn't. So it's just kind of like, when the stock market crashed and burned in March of 2020, did you take a hit? Yeah, but as long as you didn't sell, you didn't realize those losses. So it's just a matter of holding through that. So even though we are in a downturn right now, we've known it was coming though. I in the circles that I run in for a year now, we've been preparing for inflation. We've been preparing for all of these things that we knew were coming. When oil and gas markets were shut down and new exploration hasn't happened and our oil reserves are low, we knew that the price of oil was going to go up, which is going to be translated at the pump. And all of the money that's been printed over the course of this last year, we knew inflation was coming. Sometimes I still come across people that are really excited about these stimmy checks, and I'm like, no, these are bad. That might be good short term, but ultimately in the long run, we're going to end up paying significantly more than what that money was worth when it was given to you. So
It's like eating
I think
candy.
it is. It's like eating candy. And I think a lot of your seasoned investors that know what they're doing know to get into those positions, leave those positions alone, and let them mature, let them age like a fine wine. But you do have people that are emotional and they do get in and out of positions that they shouldn't be getting in and out of. And people that do that are going to have a difficult time.
So going back to the technical aspect, when we look at a syndication, let's take a traditional syndication and we're getting ready to syndicate it. And how would that look like if I'm an in passive investor, for example, and I'm getting into a tokenized syndication in the multifamily real estate space?
Okay, so essentially, and we're in the process of like our platform, and I think what I'm really excited is some of the things and aspects we're incorporating in. So our vision is to create like a Schwab or a website where people can come in. You can KYC, which is know your customer. You upload your identification. You go through that process. Then it rolls right into an accreditation status, and we will have plugins for third-party accreditation verification. There will also be other assets that will not require accreditation status. So you can go in, select where you fall in that line, and upload the correct documentation or process a third-party verification, whichever way it goes. And then once you have put where you lie, it will just open up this screen of all of the different assets that you have the potential ability to get into. So as an investor, you've got apartment A, apartment B, apartment C, and you can open up each of those opportunities. You'll have all of the PPMs and all of the documents that go with that information, the business plan, the one pagers, all of that information. And if you decide that that's something you want to be involved in, you can click, there will be an invest now button where you can click in and you can actually start the process right from the website.
So this so far sounds like the investment portals that we're using. So where
Mm-hmm.
does the token aspect play out for me as a passive investor? Where's the change in the nuances?
So really, for the most part, syndications and investing is pretty much almost all exactly the same. The only thing that we're doing, and even as a syndicator that is syndicating a deal, it's all you're going to do your raise. I mean, all of that is all the same. The only thing is, as you're uploading your asset to the portal, there's just one next step that says, okay, tokenize. So when the investor comes in, and we will actually have an offering to where you can invest with and just hold your paper, you know, investment, or you can tokenize it. Either you have the choice to go with a traditional investment or a tokenized investment. So as you're going through that whole entire process as a syndicator, there's just an additional step of actually tokenizing and creating shares or tokens of that asset. And for the investor, you're literally just going in. If you're investing $100,000 into this investment or into an apartment complex, you're just, when you're clicking on that, you're buying the $100,000 worth of tokens for that asset. That's the only difference. And so now you're holding those tokens in your wallet.
So the token in this case is generated by your platform.
Yes, the token is generated by the platform. So each asset has its own specific token that represents that specific asset.
Let's say we invest $100,000 and we're past the 1 year mark. Now I own a token of, let's call it
Okay.
apartment community 1. But now I want to trade it and I actually want to bring the money to apartment community 2. So that you actually create a token that's tradable on the platform, that's part of your ecosystem, and it's not Ethereum or a chain, it's actually a token that is only usable on your platform.
Well, no, so this is where a lot of the people that are already tokenizing, they are creating a token that can only be traded on their platform. We are creating a platform where we are tokenizing these assets. We will be connected with a secondary trading platform to where you can trade those tokens in and out of the assets on our platform, but also on other platforms as well.
And what are those platforms, or what are the tokens?
So they will specifically be the tokens for that asset. So, and they are, you can tokenize on several different blockchains at this time. So you can tokenize on Ethereum, you can tokenize on Algorand, Avalanche. There's a whole bunch of different ones out there. And something that's been happening now is they're in the process of creating tokens that can go across several different chains so that you're not tied down to one specific blockchain. So eventually we'll be able to create it on one blockchain and it will be able to hop across and move across several other chains as well. So you're not just tied down to that one chain.
So what do you think is going to happen? Do you think more of the DeFi environment money is going to come into traditional real estate investment? Or do you think we will see more of the traditional kind of real estate money moving over and eventually moving into DeFi?
Oh, that's a good question. So, I know there's a lot of hesitation right now just because there's not a lot of regulation, which we don't, in the DeFi space itself, I don't know that we want that regulation. I think crypto in general, we are going to need some kind of regulation just because to have that main adoption that we need to really skyrocket things the direction they're going to go, we do need some regulation. And we need things to be a little bit easier, especially like for crypto, just in general. People are very hesitant to go in and buy some of these assets because they don't know how to create accounts, sending things across different wallets and making sure that you don't lose your password or your seed phrases. That's really scary. There's not an ability to recover that at this point
Yeah.
in time. So, once my grandmother can hop online and create an account and not have to worry about losing her phrase and losing her assets, that is when it will change. And I know there's a lot of developers that are out there working on, solving these problems. But it's kind of that same thing. So in my mind, even though you will be transacting on the blockchain, my whole goal is to create, and the team that I'm working with, our goal is to create a platform where people don't even realize that they're transacting on the blockchain. So it's so normalized and so normal and pretty much similar to what they're doing that they don't, it's that those other steps and what's happening in the background is irrelevant to the people that are investing.
Yeah, just like I don't know what kind of JavaScript is running in the background right now, and I don't know which internet provider it necessarily going through. It's all in the background, but it's all part of the internet
Right.
on like the infrastructure of it. I think that most people don't know that there are multiple layers to the infrastructure of the internet. Even a simple website has multiple layers. And I think that's the same we will see as Web3 kind of develops. We will have that layers, and then we will have a user interface that looks actually very familiar, and we will barely know where we are.
And that's exactly right. And a lot of the places where I speak, we talk about kind of the evolution of, how the internet started. And when the internet first came out, it was really just email. People were using email, and then we kind of moved into commerce and that sort of stuff. But people were very hesitant to, use their credit card online. People were very hesitant to shop online. And if, gosh, that has changed very, very rapidly, and it's very convenient, and that has a big effect on how much things are utilized as well. So I didn't used to buy anything online. I buy everything online now because the convenience of being able to hop online, order what I need, and have it delivered to my door. I hardly ever shop anymore. I'm not out looking for the specific school items that my kids need. And, I just hop online, order it, and have it delivered. So people used to be scared to do that. Same thing with DocuSign. When I was a realtor when DocuSign actually came out. And the very first time I used it, I sent it to the other agent, and she was like, "Oh, I don't know about this DocuSign. We are not taking that. This is not acceptable." And they wouldn't take it. And now we use it for it is the standard. We went from it was new, people were hesitant about it, and now it's pretty much the standard across the board. We're able to transact and
Yeah.
complete deals all the time because of DocuSign. It's made things so much more convenient, and it's going to be the same thing with blockchain. It will be the same thing with tokenization. Right now, it's new. People don't really understand what it is, how it works, and they still are confusing blockchain and Bitcoin. So when people think about any kind of crypto related things, they're thinking about the volatility, and they're not necessarily able to understand the difference in Bitcoin and what the actual blockchain technology is and what it does, and that it's a completely different animal than, the volatility. We're not talking about the volatility or anything else. So, blockchain in and of itself is just a digital ledger that is, maintained by computers instead of people. So you are removing that,
Yeah.
component for corruption and everything else. So it's pretty exciting, and really it's going to be that technology that affects every single industry across the board. So the internet did the same thing. Electricity has done that. There's certain technological advances and inventions that have happened throughout our lifetime that have affected everything across the board, and blockchain is the next technology that's going to do that. So it's exciting to watch it all come out and to
And
watch it happen.
yeah. Yeah, that's like well, I wasn't quite there, but the early stages of the internet and Jeff Bezos said that one of the things that made him so interested in the internet is the curve of the adoption. He said anything that's adopting at that pace is going to be enormous. And the
Mm-hmm.
same is happening in crypto right now. Like we're seeing those exponential adoption curves. And I think we're still just really getting started on what's coming. It's like a very early stage development. I mean, Kevin O'Leary is very involved in trying to get this regulated. Right now, we're actually looking at a bill that's being developed between Democrats and Republicans. So there's something there. There's a groundwork where they're trying to stabilize how this is being regulated. So I think once it's regulated, just as you said, and people can wrap their head around it, we will see a real improvement. And even people think there's already a lot of money being poured in, but I think once we see real regulation and we see major funds moving in, then it's going to completely change the game. I think we're still in the early phase where retail is ahead of the tsunami.
No, I totally agree with that, and I think part of it. You talk about the internet, you're exactly right. So we're kind of following the exact same kind of bell curve that I don't know if there's a bell curve, but just kind of we're on that same slope that the internet was going on through that adoption process. And it's really exciting to see, Fidelity announced a few weeks ago that they're going to be incorporating Bitcoin into their retirement funds. But to see, and Kevin O'Leary used to hate Bitcoin. And it's funny, I listened to him at
Yeah,
Bitcoin Miami here.
2017, he was like,
Yes,
yeah,
yes, and people hammer him for it still today. And he talks about that a lot. And he brought it up at Bitcoin Miami. I listened to him speak there, and he said, I realized at one point in time I thought this was ridiculous. I figured it out, and that's really where everybody was. I think at one point in time we were all where Kevin O'Leary was. It was like, I don't know about this. This is, I don't get it. But now more and more people are taking a look at it. They're taking a look at blockchain. They're taking a look at what it means, what it can do, and they're embracing it. And we have rapid adoption coming along, and it's really exciting. And I think at the end of the day, a lot of people still won't understand what it does. I don't know exactly how the internet works, and I don't need to. I just need it to work. So, and we will get to that point where there's going to be enough smart people that come in and they will make all of this easy, and then enough people will be like, okay, I get this, I can do this, and I'm in.
well, one of the things we're seeing is that the smartest people in tech are moving into this space, which means
Mhm.
this is the hot iron which attracts top talent. And whenever in history we focus that much talent on something, it turns into something.
You're exactly right. And it's funny because a lot of people, if I talk about Bitcoin, they talk about, oh, people use that to buy drugs, they do illegal activities with it. And I'm thinking, okay, well, let's talk about what's happening with the dollar. This is not, I think some people had these, visions of, these drug addicts or whatever, playing with Bitcoin in their basements. But the people that are creating in this space are brilliant, brilliant people. You brought up JavaScript earlier. The guy that created JavaScript, and I can't think of his name, but he created the basic attention token. There are brilliant, brilliant, amazing people that are doing incredibly brilliant things in this space. So this is not this, and you're exactly right. It
Yeah.
has brought out incredible talent all across the board. So I can't wait to see where we are, gosh, 5 and 10 years from now, and the innovation. And sometimes I sit there and just, I think about how it's affecting supply chains and medical records. And, eventually we'll own our own data and, blockchain telephones and internet provided to the world. And the possibilities are endless. And it's really exciting to see all of this, even outside of tokenization, to see all of the things that are coming out and how it's changing the world is really exciting to watch.
Yeah, I think one thing that I'm personally kind of excited for is, and that might be one of the last applications when governments feel finally comfortable with this, is to kind of use it for verification processes in visa and immigration processes. Because I think right
Yes.
now the process, especially in the United States, is somewhat ridiculous how many years it takes to verify simple things that on a chain could be done literally in split seconds, given the history is accurate.
Well, and once it's verified and that information is put out there, it's there and it is instantly verifiable and it's on a public chain that can be verified by anybody at any time. 100%. I had never even actually thought about how it applies to visas, and that's a great example.
So bringing it back to the syndication space, what is the legal requirement around tokenizing an illiquid asset? I mean, and how do you generate the, obviously creating the marketplace, you need to attract capital as much as deals at the same time to kind of have that balance between, okay, we have capital, but we also have deal flow. And you need to build that in a very sensible way. So what is the regulation around that right now, and how do you make it illiquid or liquid? No, sorry.
Well, and this is all completely regulated. We're still regulated by the SEC and all of the laws that are there and in place. And so we've got, we have to have a broker dealer. A lot of the things that you see regularly all will be in place for this marketplace. So all of the regulations are still there. There's all the attorneys and everything are still involved. We still have the transfer agents, the broker dealers, the attorneys, the SEC. It's all regulated.
So the second question was, how do you make sure that you have balanced liquidity between deal flow and actually having
Yes.
enough also investors on your platform? And I assume they all need to be accredited investors, because this doesn't sound like something that uh, an average sophisticated investor could.
It will be open. There will be deals that are open to non-accredited investors. And so, I'm doing a deal right now that is a 506B that is, open to all investors. And so when you go in and do your KYC and your verification of your status and everything, you'll be able to determine that. And if you are not accredited, you'll be able to open up all of the deals that are open to non-accredited investors. So it will be open to both. But here's the thing, and I'm really glad that you talked about that liquidity, because anybody can create a platform and tokenize an asset. But if you don't have enough investors and enough people on your site to trade in and out of these assets, then being able to tokenize it is irrelevant. So one of the most important things is being able to create a platform where you have enough assets, you've got enough syndicators that are bringing assets on, and also enough investors coming in to where you have a marketplace that can be tradable. So, fortunately, I am locked in with some really amazing people that have a really large syndication club, a lot of investors, a lot of people are very interested in tokenizing their assets. And so, part of our business model is creating all of these things on a very large scale right from the get go.
I know there is some custody around the property, right? So there is a layer where you actually have to wrap up the property in custody in order to be able to make it liquid through the token. That's right, right?
When you say custody, what I don't know if I understand what you're saying.
from what I've heard from syndication lawyers is the asset actually needs to be put into custody in order, because from my understanding, it's you cannot just liquidate it because there needs to be someone verifying the overall value and transaction of it, and that has to be in custody, right?
Yeah, okay. So we do have, and if you look up, we have a company called Invenium that we'll be working with. They do maintain that. They do maintain those values. So yes, there, and I don't know if custody is the right word, but there are, first of all, and it's not just custody of the property. You have to be very careful about who you let come in and tokenize an asset. So there are processes and procedures for every aspect of this. You don't want somebody, a bad actor to be able to come in and bring just any kind of property and drop that onto a site and tokenize it and raise all of this money and then take off with
Yeah.
that cash. So we have people in place and companies in place that will be verifying. All of this information has to be verified in the background, documentation, all of the contracts, all of that information, real estate, rental rolls, all of that stuff all has to be maintained. So, and it will be. And we do have third parties that help us with that do maintain all of that information.
I mean, it is, as you said, it's something that where people have to spend some time, and Kevin O'Leary and Mark Cuban also always emphasize that, like,
Yes.
spend your 100 hours in it because you have to understand it. And in similar fashion, this is something where people and syndicators have to kind of do their homework and understand how does this work, how do
Yes.
these marketplaces work, and just as you said, the marketplace themselves, they need to have a certain standard in order to actually have a good market environment where people feel comfortable buying and sharing. But given that it's on a chain, there should be a lot of additional trust because you don't really need a third party to verify many things, given that they are visible on the chain.
Yes. So no. So once we do have third parties and people that will be verifying the information that's submitted, all of this real estate documentation and everything has to be submitted. It's verified by actual people before as it's put on the blockchain. So once it's verified and put on chain, then
But
you
once it's
have that
on,
trustless environment. Yes. Yes.
well, I've been looking at from different perspectives around how the chains work and kind of because in the food supply chain, that's the whole idea. Is, right now it's about trusting your entire supply chain. You just have to trust that whatever is the label, that's what's in the label. And I mean, they're trying to kind of give it more trust through the chain, but at the same time, it's a label on top of the chicken. So that doesn't quite do the job. But I think with paperwork, if we know the first source is legit, it can't be repackaged on the chain. So it's slightly different.
Right. And it's funny that you say that because I actually learned the other day that 30% of the drugs that reach our pharmacies are fake. And I had no idea about that. So I know, there's several different blockchain companies out there like VChain and some others that are trying to fix some of the supply issues. And, that we're, from manufacturer to distributor, that's all these supply chain issues. I had no idea that we had that many pharmaceuticals hitting our markets that were fake. And so I don't know what's happening to them between, but and I don't know exactly how it fixes everything, but I've read through some of the articles and the way that it's a lot in the custody and everything else. So it's very interesting to see and how they're actually able to verify, if you've got a Louis Vuitton purse or something like that, they will have certain codes in it, QR codes where you can scan that and verify the authenticity of bags, food, pharmaceuticals, everything, which is really exciting.
But I guess a Louis Vuitton bag, to some degree, you could do that already today because you have the QR code and it's made in one place. And then I check the QR code, and if they verify it, I should have the right kind of bag.
Yes. Well, right now you get some kind of a little deal in that, but I think people have done such a great job of making fake purses and fake materials for, it's sometimes it's really difficult to know if, sometimes when I'm looking, and especially in some of these resale shops, you don't know what you're getting and what's real and what's not real. And there's been places where I've gone to stores that were good reputable stores that ended up getting in trouble for selling fake items. So it's everywhere out there.
There's an amazing story, and I don't quote me on the city. It happened in one of the major cities in India where someone pulled a lease in a very respected hotel. He bought prime real estate. No, he didn't buy it, he rented. And he put up a fantastic first class luxury purses and everything and sold it right there in the right kind of environment, top pricing, and it was all fake.
See, if he had a QR code,
And it's just amazing because also the reputation of the entire environment suffered, the hotel, and
it
everybody was
affects
like on the hook
everybody.
for it.
So if you had some kind of QR code or something that's created into that that goes and verifies the authenticity through Louis Vuitton's website, or whoever, Gucci or whoever it is, you're able to eliminate some of those issues. So, which is great. The wine companies are putting QR codes on their bottles, so you can scan that and you can actually see, where the grapes were grown, what the pH of the soil was, what area it was created in, what it can be paired with, and just all of this really great information that goes along with the creation of that bottle of wine, which I think is really neat.
But I guess they still could put in any information there. I cannot verify the information that they give me. They just connect me with the information, right?
Yes, and there's going to have to be a way to validate that that QR code is taking you to the appropriate site, because there's still going to be ways for scammers to come out, but these developers will find a way to verify that you're in the right place.
And I mean that's the same today. We get emails every other day where somebody is trying to use a very similar looking domain or email address, and they give you all of the same kind of designs, and if you're not aware, you click the button, and that's the way, like one of those famous emails phishing scams.
I think I got 5 of them in my email today, at least.
Yeah, and see, there you go. So rolling it back a little bit, where did your money mindset come from? Like, where did the savviness around finances and investing come from?
That is such a great question. So, I have gone through ups and downs and everything. I inherited some money years ago. My dad was a petroleum engineer, and I made some mistakes with it. I spent more than I should have. And I finally sat back and thought, okay, I've got to be smarter than this. Like, I'm not making good choices. I've got to be smarter. And so it turned out that my very best friend is Kara Helms, and her husband is Robert Helms, who is one of the real estate guys from the Real Estate
Yeah.
Guys radio show. And here, probably about 2 or 3, I guess it's about 3 years ago, I really started changing what I was doing, trying to make smarter investments, making better choices with my money. But really, it was when I got involved with the real estate guys, they asked me to come to their investment summit and speak about crypto. And from there, I learned a lot about asset classes and how to leverage one asset to help obtain another asset. And, Russell Gray did a fantastic presentation on how you can own precious metals and you can actually borrow against your precious metals to, to get into another asset. So that's really what I've spent this last couple of years doing is, acquiring more assets, leveraging one asset to acquire another asset, and really growing my wealth and growing my knowledge. And about a year ago, I moved into syndicating. So now I'm syndicating my own deals. And my main focus now is really tax strategy and helping my investors pay no taxes. I'm trying to figure out how to teach them, or not how to teach them, but how to help them, keep as much money as they can and get that mailbox money that we all want.
A nice cash flow check.
Yes, yes, I love the cash flow checks. So, I started reading the Rich Dad Poor Dad series, and it's just stemmed from there.
Yeah, awesome. I mean, this must be by now the most mentioned book on the podcast so far. It's like, the gem, Mr. Kiyosaki.
Yes.
He's touched millions and millions of investors with his book, I think.
He has, and it's funny because when I first heard about it, I hadn't read the book. I think I was literally the only person left on earth that had not read Rich Dad Poor Dad. And then I was lucky enough to have dinner with Kim Kiyosaki the other night. And actually, last year I was able to sit on a panel with Robert Kiyosaki and George Gammon and Doug Duncan from the Fed and a couple of other just amazing, brilliant people. And we did a whole panel on what is money. So that was a lot of fun.
You're definitely not the only person in the world who hasn't read it. I mean, it seems like everybody has read it, but that's really only in the circles, where money matters. And I think many people in the world, money matters, but they don't have the money mindset, what it takes to kind of leverage, for example, assets or be tax efficient.
That's right. And that's because our education system has failed us in teaching a financial education. So we aren't taught how to grow our wealth and how to make our money work for us. And so that's actually something that I'm really trying to help educate my friends and even my kids. My youngest kiddo's 13, and I want him to go off into the world, starting off on the right foot and understanding how he can get his money to work for him instead of him to work for his money.
I saw a great post yesterday where a father, he gave the kids, they had to read Rich Dad Poor Dad, and they got a couple $100 for that. And they had to read the 4-Hour Work Week from Tim Ferriss, and they get a couple $100. But in both cases, with one book, they have to build a business with the money. In the other one, they have to find an investment strategy and invest it. They don't really get the money, but they get it, and it's obviously, we all know, it's more about the learning curve and setting the stage for their mindset.
I love that. So I don't pay my kids for their grades or for chores or anything else like that. That's, their job is to get good grades. Nobody's paying me to make my bed. So, but I pay them to read books. And actually my kids have all read Rich Dad, Poor Dad. And I love the book called The Go-Giver. It's a fantastic book. So we've had a whole handful of books that my kids have read, and we're actually in the process of building an Amazon business for them to do. But I will take them, like, if they are getting money for something, I'll tell them, if you will invest it in Bitcoin or invest it in precious metals or invest it, I actually will give them more than what I was originally going to give them if they choose to make a better choice with their money.
It's great. You have to start employing them with something simple in your business so they can earn, and then you can give them a tax-free investment.
That's exactly right. I love it.
There are all kinds of great strategies around it. I have a friend who actually included his daughter in the marketing of one of his businesses. So she started earning, and they started utilizing that for her Roth IRA when she was like a toddler. And it's fully legal because you can, structure it in such a way that she's actually part of something where she generates value and she gets paid for it. And you can move that over in your Roth IRA. And I mean, at that stage, you're compounding from like the earliest stage you could possibly do it.
Which is so smart.
So, well, I want to be respectful of your time. Where can people connect with you?
Yeah, so probably the easiest is I have a website. It's CourtneyMoeller.com. And it's CourtneyMoeller.com. And from there, it'll lead you to my podcast, my investment group, a little bit of everything that I have going on.
And then my final question usually is, what does it mean for you to have a life well lived?
Oh, that's a really good question. I had somebody ask me the other day what wealth was to me, but a life well lived. I think this evolves as I grow and, as I get older and I grow in what I want and, what I want for my family and my goals. My goals, they get bigger every year. And, initially when I first started out on this, it was, to create a certain amount of passive income, have a certain amount of assets. And then that evolved into, okay, really my biggest goal now is how can I help other people? So I'm trying to figure out, what is the best way for me to help as many other people, achieve the goals that they're trying to achieve. I think waking up with an abundance mindset every day. I wake up every morning. I'm so thankful for my day that God has given me. I'm thankful for everything that I have. Being able to have the time we're only given a certain amount of time on this earth. So, having money is great, but having the time is really, to me, what, true wealth. And, being able to go to all of these functions with my kids and travel with my kids and, surround myself with other amazing people that have big goals and big visions, and, having these amazing conversations, and that way I can take that back and I can spread that and help as many other people enrich their lives. That's kind of my big thing now is, it's so fulfilling to know that, when I get an email from somebody that says, thank you, Courtney, so much, this has changed my life. That is the best feeling on the earth. And so that is probably one of my biggest goals right now, is to help change as many other lives as I can through financial education.
I love this. I mean, this is really, it rings so true. It's in the sense of service, and I think that's where we truly have a fulfilled life. It's never just about us, unless we want to feel empty, then we can kind of walk down that path. But I think generally the juice in life comes from service and giving. And yeah, so thank you so much for taking the
100%.
time, sharing your insights.
No, thank you so much for having me.
You're welcome.
Yes, I'm so honored to have been on your podcast. I'm so thankful that you've had me. So I've really enjoyed talking with you. It's been a lot of fun.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.